Hello, dear listener. You are very welcome. We have a humdinger in store this week. A common question slash topic slash need for a lot of people out there is how to save for kids and how to gift assets to kids. It's a big area. There's lots of policies out there that can try and satisfy the need. But what I'm going to share today is two valuable lessons, ultimately avoidable massive tax bills that were in the Tax Appeals Commission in recent times. One around gifting of a house to a child, and the other around gifting cash under the small gift exemption to a child. So, two very, very valuable lessons. I'll explain what happened and why and how it could be avoided. Ultimately, that is my intent, dear listener, all in the space of a few short moments. That is the plan. First and foremost, I think it's been very interesting to observe markets of late. And I'm sharing here for anyone that's viewing this on YouTube or looking at the full video, a little bit of info on the last 12 months. I know it's easy to say, oh, what about since the start of the year? But the last 12 months, an 80-20 portfolio that we like to use is just under 7%, 6.8% as of the end of last week. It's hard to believe a 90-10 portfolio is up over 7%. Emerging market funds up 8%. Developed world index up just under 8%, right? Global bonds up just under 3%. Small cap, 3%. These are all positives in the last year, in the last 12 months, which despite all of the craziness that we've experienced is really something. And things aren't quite yet back to the very top that they were at before things happened, if I can say that in summary. But hey, over the last 12 months, to pick that time frame, it's very interesting to see those kind of numbers and very encouraging for people who were able to stay calm when things were getting particularly scary, which they may do again, which they will do again for whatever reason. But it just shows the value in holding firm and not getting wound up by it and potentially making some mistakes ultimately. And that's what we're here to talk about today: is more mistakes, possibly unfortunate events, possibly bad timing. So let me get into it for you. So let's pay attention, right? First one, I'm going to talk about the gifting of a property, the inheritance of a property more so. And the second one around regular saving and passing cash for kids under the small gift exemption and CAT threshold. So let's get stuck into it. All right. So case one, this was ultimately one mistake and it cost 77,000 in tax. All right. A woman inherited her mother's home and believed she qualified for the dwelling house exemption, which ultimately can mean if you satisfy the conditions, you can inherit the family home and pay no capital acquisitions tax, right? Because if you did have to pay capital acquisitions tax, that could mean that you might have to sell the home and then you are ultimately homeless, right? Sell the home to pay the tax. So that's what the dwelling house exemption is there for. One of the main qualifiers for this particular relief is that you, the receiver, don't own or have an interest in any other property at the time. And the logic here, I guess, is that only people who do actually live at home with the parent or the disposer prior to death can inherit the home tax-free, right? It's not intended as an exemption for people who already have other property, irrespective of where they claim to live. In this case, really interesting, and ultimately you could say unfortunate. The woman lived in the family home with the parent prior to death, right? So qualified met that condition. So she claimed the dwelling house exemption, right? So, hey, I'm after inheriting this home. I'm claiming the exemption so that I don't have to pay a 77,000 euro tax bill. She lived there. However, revenue disagreed and rejected her claim for the dwelling house exemption. It was then advanced to the Tax Appeals Commission, where we can go if revenue arrive at a decision that we feel is incorrect, right, or unjust for whatever reason. But the Tax Appeals Commission is there as totally independent from the revenue to aid these and to settle these debates and challenges ultimately. The Tax Appeals Commission agreed with revenue that this person, this lady, did not qualify and should pay the 77,000 tax bill. Why? Well, revenue's view and the Tax Appeals Commission's view was that she still had a legal interest in a second property and was therefore not eligible. So this second property, you say, what sort of messing was this particular individual up to? Well, it was her former marital home. She was no longer in that relationship. She hadn't lived there for years, but the paperwork to get her name off that property had not been completed. The paperwork had been initiated, but for whatever reason, I'm not aware of, it hadn't been completed. So legally, technically, she had an interest in another home. Result is 77,500 euro CAT bill, no exemption, painful outcome if that was a genuine mistake, which it sure seems like. But revenue, black and white, you do not qualify for the dwelling house exemption because you have legally, you have that interest in the other home on paper. Nasty. So that is around gifting, receiving, inheriting assets, using exemptions. Really, really important. Really, really important that I's are dotted and T's are crossed. I was about to say I's are crossed and T's are dotted, which would be a bit of an oxymoron, if that's the right term to use. Case 2. This is one that will apply to an awful lot of us, right? Really, really interesting. They say you shouldn't say really, really, or really at all, or very. And I'm probably saying it an awful lot, so apologies. Case 2, mistakes in savings for kids in Ireland, 65,000 euro in tax in this particular case. And my summary of this particular case is the money was just resting in my account, father. This is, again, a case that went to the Tax Appeals Commission, I beg your pardon, and it's one we can all learn from. Firstly, let's just give a very, very quick reminder for ourselves around the small gift exemption. Small gift exemption, this relief allows anyone to gift anyone else up to 3,000 euros per year with no taxation for either party. All right. One of the conditions is that it must actually transfer from one person to the other, irrespective of whether they are parent, child, friend, etc. The most you can transfer tax-free from one person to the other is 3,000 in each year, right? Under the small gift exemption. This gifting, assuming it's done every year within the limits, does not eat into your capital acquisitions tax limits and thresholds, which are separate to that. So the most commonly known one is that a parent can gift a child 400,000, or a child can receive 400,000 from parents in their lifetime. Okay, they can receive the 400,000, and they can receive the 3,000 from each parent. They're separate. One does not eat into the other, provided they are done in the correct fashion. So in theory, a child could receive 6,000 from parents, plural, so 3,000 by 2 per year, right? So 6,000 per year, for example, for 40 years, right? that would total 240,000. Plus, they could receive the 400,000 Group A threshold as it currently is. That's 640,000 totally tax-free in such a scenario using your threshold plus the small gift exemption in that way. And again, that's just a very, very quick example, okay? Let's get back to the case though, right? So now that we have that established, if not already known, this case again ended in the Tax Appeals Commission also and centered around an individual, the child, who received a lump sum cash gift of 165,000 from his parents in 2021. They claimed this was a lump sum payment transferred to the son, but it was the accumulation of many years of small gift exemption. All right. So yes, we did do that, right? Revenue came looking. We did do that transfer, but that was accumulations of the many years of the 3,000 as it is now, right? From each and from aunties and all sorts of stuff over the years. And we just transferred it to them into the child in 2021. And revenue were like, no. The child had already used up Group A in their view, tax-free threshold, and this was a lump sum payment made on top of that in that year. Therefore, this 165,000 meant a tax bill of 49,500 on that gift alone, right? So it was like, geez, okay. So in 2022, the parents paid that tax on his behalf, right? Which, of course, well, how would revenue deem that if you just basically give them another 50,000, as it were? Revenue treated that as another gift. So now this second gift added another 100 or another 16,000 odd to the bill, bringing the total capital acquisitions tax that revenue were seeking to just under 66,000 euro. Not nice. Not nice at all. We talk about compound interest a lot, right? Where you've accumulating funds and you've dividends going in on top and accumulating and growing interest on interest. This was compound taxation, ultimately, which is not fun. So neither the parents nor the child could have been too happy about this, I imagine. So they brought the case to the Tax Appeals Commission, hoping it would get overturned rather. Their argument was ultimately this: the money he'd received from his folks years before, 170,000 in 2017 and 19,000 in 2018, weren't gifts in the traditional sense. They weren't one-off lump sums, really. Instead, they claimed that they were the result of annual small gifts from his parents and granddads dating back to the early 90s, which had just been building up in an earmarked account for the child in the parents' names. And then they lashed it all over to them in a particular year. As I mentioned earlier on, under the CAT rules, capital acquisition tax rules, you can receive up to 3,000 per year from anyone tax-free, but you need to actually receive it. It needs to be a transfer of ownership to the receiver. Revenue won't buy the argument that the money was just resting in my bank account, like Father Ted did, right? It needs to be a transfer, irrespective of, it was earmarked for X, Y, and Z. They didn't buy it. So unfortunately for our man in this case, it appears there were no annual transfers and no records confirming, no bank statements confirming. And even if the parents were the most trustworthy people on the planet and had won awards for their trustworthiness and honesty, in tax terms, verbal evidence won't cut it. It needs to be a legal transfer. The commission, the Tax Appeals Commission, ultimately didn't buy it. They said those earlier sums were definitely taxable lump sum gifts from the parents. They did not qualify under the small gift exemption. So that meant the CAT threshold had been eaten into well before the 2021 gift arrived. In other words, the revenue were deemed correct to have issued a tax bill of 65,835. Ouch. That tells us if you're going to be gifting to children or to others and hoping to qualify for the small gift exemption, there's a few things we need to be aware of. And if we're going to planning to gift or inherit, planning to inherit as you, planning to receive property, or we plan to gift property to others, there's a few things we need to be aware of, in my view. Number one is good intentions aren't enough, right? This was my thinking. This was my plan. I was hoping that it would be viewed this way. And look, you can, this is broadly speaking how we did it. Irish tax law is black and white, as I'm sure it is everywhere else. You either qualify or you don't. Nearly doesn't cut it when it comes to reliefs like the dwelling house exemption or the small gift exemption. Number two, maybe I'm biased here, but the right advice makes all the difference, right? These situations could almost certainly have been avoided with any sort of legal or financial advice, you would imagine, or tax. You'd hope that they would have been spotted in advance if they had been discussed and known. If your financial picture includes property, business assets, or inheritance planning, or savings for kids, getting proper guidance as early as you can ultimately is, I believe, vital in avoiding mistakes and getting surprises down the road. And that's what we try and do here at Informed Decisions Financial Planning, is encourage people to look at the big picture and to plan around it using, and not that we are not the experts in the legal and the taxation space, but let's get help there. Let's get some views, and the financial planning piece, then we can help, right? But it's the big picture piece, right? Absolutely makes an awful lot of sense. Is there work in that? Yes. Is there cost in that? Yes. Is there effort involved? Yes. Should it pay dividends? Yes. Right. Figuratively and in reality. Number three is Ireland's tax reliefs are reasonably generous in some cases, but they're rigid. And you can appreciate why they have to be, because look at you did actually, you submitted the paperwork to get that transfer, but it didn't complete. So we'll go on, away you go. It's, where do you stop, right? So while it's that first case in particular was really nasty outcome in what seems like a very genuine case, it has to meet the conditions, right? So that's why, again, having the right advice, whether it's tax or legal or financial, having the right advice, knowing the black and white, and being able to say, yes, we tick X box as needed. Miss a step and it could cost you dearly ultimately, as we saw in this case, 77,000, 65,000 in ultimately avoidable taxation. So when you're looking to save for kids, try and ultimately do it properly is my basic recommendation here. There are some things like the small gift exemption of 3,000 per parent, to use that example, or per person, right? Depending on the situation. Completely tax-free, but complete the transfer in each year, right? They're the key things. Section 73 policy we saw earlier on, where the parents settled the tax bill, the first tax bill, and that led to another tax bill because the payment of the tax bill was deemed as a gift. Section 73 policy is something that is legally set up to cover a future CAT bill. That's something you can do, provided, and it ultimately is a policy, an insurance policy, which we don't do, right? But we can help you get it sorted. But ultimately, Section 73 policy says, I'm setting up this policy. We're going to put in X amount every month, or whatever the case may be, and this is the future purpose of it. And so in that scenario, if there was 50,000, for argument's sake, kicked out of a Section 73 policy to pay a CAT bill, it wouldn't result in that additional 15 or 16 grand additional CAT bill. That's a Section 73 policy. Ultimately, bare trusts can be effective for gifts to children under 18, where you retain control and structure and choices up until they're 18, and after that they become ultimately the owners and the controllers. And planned inheritance and house gifting strategies with the goal of minimizing CAT and hassle and avoiding legal pitfalls, potential family partnerships, etc., or indeed just gifting the property. Those are things that can be explored. Ultimately, you know, try to get it right. The woman in the tax appeals commission case didn't appear to do anything malicious or careless. She was probably unfortunate, I guess, in that the transfer paperwork didn't get finalized in time without knowing the specifics of the case. But if you're focused on saving for your kids, generating generational wealth or gifting assets wisely, it's important to plan with precision ultimately, or at very least to have a proper exploration of the options and the possible opportunities. That's the first step. What are my options? What can we do here? What and then what makes sense? What's palatable to us? What looks like it's going to deliver the most bang for buck in terms of cost and hassle and maintenance? And then it's a case of deciding whether you proceed or not. But at least you'll know what you can do. And then no decision is a decision, no action is a decision, or some action is a decision. But you don't have to do anything until you've done those first couple of steps. That'd be my tuppence worth. So, a couple of very interesting cases where a few unfortunates will hopefully help light the way for some of the rest of us. I hope this has helped. I enjoyed putting it together for you. Thank you very much indeed for watching and or listening. As always, you're a legend.